they've been buying, big institutional buyers have been purchasing puts all the way down, both in the SPY, which is, of course, the S&P 500 mini contract, as well as the IWM. They've just been buying, buying, buying. And we haven't, quite frankly, seen volumes like that in a really long time, especially consistently, Frank, those kinds of purchases. So the question is, I guess, is that hedging or is it betting that the market goes lower? Either way, those are big, big purchases in the IWM. I shot you pictures of a couple of them, I think.
Yeah, I was just looking at it. I mean, needless to say, very bearish signals from some people in the market, placing those bets against the market. One thing I know that you keep a pretty close eye on is the VIX. The VIX spiking over the last week. Is there any direct relation to some of the volatility that we're seeing, to the idea that investors really want to hedge these bets?
I think you'd really like to see the VIX break a little bit, sort of like a fever when it breaks. And that would be something that would cause the amount of purchases that they're making on puts, which are, of course, that downside bet or that protective measure that people put in place. If you saw the VIX break back down into the mid-20s, Frank, I think you'd see pretty rapid giving up of some of these puts and probably more speculation that maybe the market bounces. But at least so far, we haven't seen very much of that.
You know, John, I'm going to be honest. We've been talking, on this show off and on for about a year. I can't remember the last time you said the word put. It's been a while.
Yeah.
Are we seeing any calls still in tech, even with obviously interest rates expect to go up? Is there any sectors or particular stocks where investors still feel confident?
There's been some upside speculation in, you mentioned Tim Cook with Becky just moments ago, in Apple, of course, and in Microsoft. But even those stocks have been carried lower because of the general market malaise and or outright bearish positions. I'd say the best spot for right now, even though the crude oil contract is down today, is probably still energy, Frank. Refiners like Valero and Marathon, as well as some of the exploration areas like the XOP. Those have seen very robust speculation, I'd say, in calls, betting that the prices go higher rather than lower.
Before we let you go, we just got to talk about the broader market. Safe to say the FOMO trade, that's way, way, way over. But the market always, people say, is looking for quality. And I just touched on this with somebody earlier. Amazon really seemed like quality. Revenue's up, cloud marketing's up, and we all expected logistics business to take a bit of a downturn as the pandemic begins to break. If Amazon's not quality, where is quality?
Well, I think Amazon is quality, to your point. So the problem is that for some investors, like Warren Buffett, for instance, the PE is still just way too high. So as good as the company does and as great as it is top of mind with consumers, it's just not a company that's going to attract that kind of investor. But it could attract a whole host of other institutional investors, Frank. And I would think after the week that it had last week, that Amazon will be on some people's radar screen this week.